All right, my name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keep least amount least amount of taxes possible while keeping them out of jail. So today I wanted to talk about when I wanted to talk today about when it's time to get a formal set of books. Because I work with a number of businesses, and and when it's time to do, and when it's tax time, and we have to report, obviously our income and our expenses, so we can figure out what kind of taxes that need to be paid or save. Um, so I have a number of businesses that where I pull this data from accounting software. The most popular one out there, QuickBooks. Another one is Xero, which is gaining popularity. Which, by the way, can be a great, cheaper alternative to QuickBooks. So, if you don't feel like paying QuickBooks prices, yeah, check out Xero. So, and I don't get paid by it, but yeah, it's pretty good software. But anyway, so I have a number of clients who use the accounting software, and it spits out the reports, and we use that to do the taxes. I have a number of clients who report their income and expenses on a simple spreadsheet, and they take an Excel sheet. I have a template for some of those clients, and they enter in the money that they made, the money that they spent, and we construct the tax return from there. So the question though is, and sometimes what I run into is that there are a number of clients where uh, they're presenting to me the spreadsheet, but they probably should have uh, a formal set of books. Um, and they should have a formal set of books. And there are different scenarios where each is appropriate. Um, so there are scenarios where uh, there are scenarios where each of those methods are appropriate. So it's definitely not a one size fit all, but fits all. It's definitely not a one size fits all, but I did want to point out situations where, or I did want to point out, uh, but it did raise the question of, well, how does one know when it's time to actually have a formal set of books? Because you may start out, when you're starting out, getting started, you may not necessarily need to have the books, and the Excel sheets, are fine. But at what point do you need to make that transition to a formal set of books? So, in my opinion, the magic number is when you need to make sure that you're on books. Is That magic number is 250,000, um, and I say that because on most corporate returns, uh, corporate returns, um, corporate returns, partnership returns, uh, there's a different reporting requirement, or there are increased reporting requirements if your business grossed 250,000 over the course of the year, or you have 250,000 or more in assets during the course of the year. So if you reach that 250,000 threshold, whether that be with income or assets, you have to report a full balance sheet on your tax return. If you're below that threshold, they don't ask you to report or list out a balance sheet. They just ask what your total assets are, which you kind of need a balance sheet. I mean, that is a part of the balance sheet, but you can kind of figure that out off an Excel sheet if you're below that 250 for the most part. Um, but if you hit that threshold, you have to report a full balance sheet, and that's definitely when you need to have a set of books, because um, the Excel sheets are cool for because Yeah, the Excel sheets are cool for uh, doing the income statement part, showing the revenues and expenses and what the net is. So it's fine for that. It's really not fine for constructing a balance sheet. So the big things become a lot more difficult to do that. I know that when I encounter clients that come to me that are over that threshold and they need a balance sheet, like I can put it together and I put it together for them, but the charge is significantly more because it takes more time to put that together. So um, and even with that, I'm constructing it to the best of my ability because I'm looking at what has happened in the past, and sometimes with these, and then if you're going off of Excel sheets, not every dollar is accounted for, so it's really it's tough to do. I do it and I try to make it work, but it's tough to do off of an Excel sheet. So so you face accuracy issues, but also just cost issues in preparation because it takes a bit more time and effort to put that together. Now, I guess you could say it's the equivalent of you having to pay someone to maintain your books over the course of the year, but more importantly, you'll also just deal with accuracy issues. It's really tough to be accurate off of spreadsheets to do a balance sheet. Um, so that's usually the threshold. So if you're at that 250K mark, you really should be hopping in and doing a set of books, just to avoid a lot of headaches at tax time. Now, that's the threshold for taxes, but I would also advise you may want to hop on that sooner before you may hit that threshold for reporting purposes. Um, if you're growing your business, building your business, and if you want to get an idea of the performance of a company, you can do that. You can do that off an Excel sheet. Um, but You can do that off an Excel sheet, but it's really hard to dig deeper into the numbers off of an Excel sheet with just that one, with really just a revenue and expense profit and loss statement. So, balance sheet, statement of cash flows, these are all things that can be created really at the click of a button in your books in accounting software. So it's really tough to dig deeper into the metrics and performances of your company by doing so, by not having. Um, so to be more on top of your numbers and from an accuracy related standpoint, I would say you probably want to hop into that sooner than later. I would say maybe when you hit that 150,000 threshold. So, and that's usually around the number where, let's say if you're a solo business and you're putting everything on a Schedule C, you're a sole member, one owner of an LLC. Usually when you hit that 150K or so in revenue, that's pretty much when it's time when you really need to start considering. Uh, when you need to start considering if you should tax yourself as an S corporation, and once you make that conversion, um, you definitely want to. And if you're making that conversion, it probably really makes sense to make sure you switch over to a full accounting software to get a full set of reports there. Um, but that's a different threshold. But again, for something where you may absolutely have to do it, tax reporting standpoint, 250. If you want more accuracy in your reporting, then you may want to consider it. I'd say at the 150K in revenue annual mark. Uh, so there you have it. So that's all for now. I hope this was helpful. And if you have any more, if you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right, that's all for now, and I'll talk to you in the next one.